buy or sell the South Korean stock market ETF. So first off, read this disclaimer carefully. Then do your good deed of the day by liking and subscribing. So South Korea is in North Asia, 14% from the 52-week low and 34-ish% away from the highs. We start with the chart, long-term picture, and weekly data points. The thing is that we are relatively low. What is very interesting about this stock market is that you have occasionally had these enormous time cycles. Like these were like super huge time cycles. Based on those time cycles, then the ultimate low will come mid into 2024. But it could also be that, let me just draw it in, that this period here is sort of like a compressed version of these prior time cycles. That's possible. The thing is that we have recently fallen down to a pretty low level, back to the lows here of 2011. So you could argue that this is approaching a level of value. The primary issue for South Korea is this moving average. Let me draw it in. This purple 20-week moving average has defined this entire downtrend. We have tried to go up there, but we have failed every single time. As long as we are below the purple 20-week moving average, I would say that the bears are in control. And what we so far have is just a bounce within a downtrend. You see back here, you had 4 weeks of a rally that failed. Now we have only have 3 weeks really in a row of a rally. So it's definitively going to be interesting to see what happens next. On the daily data points, you have the blue 100-day moving average, which forms the same, basically has the same role. Let's measure how close we are to that moving average. So yeah, it's 2-ish% above us. So it basically is all about those two moving averages. They define the trend, and the bears are basically in control as long as it turns into a resistance level. If we were able to break out, then things change. So let's look a bit at RSI and the PPOs. So we are relatively low on RSI, but on weekly RSI, we are at the same RSI level that we failed at early in August. And yeah, pretty close to the level where we failed. Let's look at the daily data points. As looking at daily RSI, the issue is that we literally are at the same level that we failed at the last time. Looking also at the PPOs, like the green 50 daily moving average PPO, and also here at the MACD, we are at a level that usually brings out the bears. So looking purely at the technicals, we are at 20 and 100 moving average resistance. Weekly data points versus 100 daily moving average data points. I will give the bears a -6, but that is completely contingent on these resistance levels holding. If we were to get a breakout, that would be a big game changer, but currently we do have the setup that is the way it is. The sort of caveat I would have there is that we are emerging from a level that is so low that you could start to argue for value. Let's now look at the seasonality. So to the right here, we got the average over the last 5 years in green, 7 years in blue, and red the last 10 years. Overall, there is weakness, especially into mid-ish November. Then there is some strength, but give back into early December. So the seasonality here is a bit messy. To the left, over the last 5 years, November and December and also January are pretty strong, so that is bullish. Over the last 10 years, it becomes a bit messy because November is very 50-50, but December is strong. And over the last 20 years, November closes higher 55% of the time with an average 1-ish% gain, but December is the big bull month, has 74% of the time going up with a 4.4% gain. So December is very strong for South Korea. However, we are still in November. I think I will give this one slightly to the bulls. I give the bulls a 2, but the real bull month for South Korea is still December. Let's look at the fundamentals comparing South Korea with USA. In terms of the year-to-date performance, -33 versus -21. So South Korea is underperforming. You could argue that there's more value because the PE is 18 versus 21.7 for USA. Beta is slightly lower, 94 versus 99. Dividend yield 0.80% versus 1.22% for America. In terms of the holdings, I got Samsung on top, Hyundai, Kia, so various well-known companies. Here is the sector breakdown. Electronic technology is huge in South Korea, followed by finance. So definitively more. Well, it's more concentrated in certain sectors than what we see in America. Here is the market cap breakdown, more mixed there. I will give the bulls a 4 here on the fundamentals. There is some value here, and even though you could argue that electronic it's a bit overexposed, not enough diversification, but I would argue that tech is such a broad category now. I mean, most companies are some way tech related, so it's a bit of a different thing. Everything is tech. Okay, so in this case, we have relative performance being analyzed. We start with the correlations, and there is a 65% long-term correlation between South Korea and USA. And then there's 62% positive with China, 94% with Japan, with the EWY ETF, and minus 74% with the dollar index. Daily data points, 84% with America, 67% with China, and 96% with Japan, minus 96% here with the dollar index. So looking long and short term, the strongest correlation we do get is with Japan. So let's look at the Japan ETF EWY. So here's the long-term chart. It looks a bit similar to what we saw in South Korea. So these markets, they have way shorter bull markets and also more frequent bear markets. Here you have a bull market between 2016 and 2018, then all of a sudden we have a bear market here of minus 25%. So these markets are way more tradable, really, especially if you are more into like long short portfolios than various other markets. So there's a lot a lot of activity here, way more opportunities, frankly, than we see with the S&P 500. We see something similar here. We are in a primary downtrend. We are bouncing now. Looking at the daily data points, it's a bit messy. The green 50-day moving average here has been a bit of a key level. But when we look here, there is something a bit interesting here in Japan. This is a bit of a fight. I mean, the bulls did not really pull it off. But if they do something similar now, then it could actually become a bit more of a bullish thing longer term, because these are the types of moves that will make bears reduce their short positions. Here is Japan versus South Korea. So when the line goes up, it means that South Korea is outperforming Japan, and the opposite is also, of course, the case. Yeah, it's a bit of a messy relationship here. There could be something a bit double bottom-ish happening here. which could suggest that South Korea is going to outperform Japan a bit. So that's something to keep on our radar. Let's look at the seasonality. What does it project? Yeah, we usually have a bit of weakness from South Korea, but around the 10th of November is usually when it starts to systematically outperform Japan. I will give the Bulls a 5 here on relative performance. We end up with a 1.3 in favor of the Bulls, but with the quirky situation with resistance on the technicals, weekly and daily data points. But given that the other data here is bullish, it increases the probability of a breakout. But currently we are at resistance, so technically speaking, it makes more sense to be short than long, but maybe a tighter stop. So we have some time left. Let's go through some of the stocks in the South Korea ETF. So we start with Samsung, very famous company. A bunch of different listings here. So we go with Samsung Electronics. Yeah, it's a bit of a messy chart because we are below the red 200 week moving average. We have a bit of a rally. Let's go to the dailies. Yeah, so we have a breakout and support here over the blue 100-day moving average. That is interesting. So there is something a bit bullish here. Yeah, I would say that this is bullish. Yeah, this looks interesting. So let's go a bit further down the list. Next is SK Hynix. I've never heard about that company. This is a bit of an interesting chart, given that we are emerging from some kind of horizontal support level. So you could argue that from a risk reward standpoint, turning bullish here is not the worst time historically to turn bullish. Usually it works out. So let's go here to the dailies. Yeah, we are seeing some higher lows here. So this is definitively one of those. Yeah, we are bouncing from that RSI level that has worked temporarily, at least in the past. So that also is good. Here are the daily data points, and yeah, basically a more nuanced picture. Next is LG Chem. For those who want to trade international stocks, interactive brokers, they have a pretty good platform for it. It usually is more expensive, in terms of commissions to trade, international stocks. But the big but is that you do also get currency diversification. So here's LG Chem. We have already seen a bit of a rally here. So it's a bit late to the party because here we had a rally, but then it failed here as well. So yeah, I'm not a huge fan of buying these kinds of patterns. I prefer to get in earlier and rather be a part of this move instead of being a latecomer. And here, let's look a bit at the RSI. Yeah, the RSI is pretty high, and also the PPOs are at previous fail levels on the dailies here, and on the weeklies. Yeah, the weeklies are a bit more messy. Could potentially be more left in the rally longer term, though, looking at these weeklies. Here is Hyundai Motor. Yeah, the red 200 week moving average. Extremely tradable, but we were not able to use it as a support. So this is, yeah, I'm not a huge fan of buying right after a key support level failed. So obviously there's not that many bulls here waiting to buy Hyundai. If there were, it simply wouldn't slip below that support level. So yeah, we have looked at South Korea and also some of the stocks within the ETF. It's a bit of a messy situation. The technicals are conflicting with some of the other data looking at the ETF itself, but when we looked at some of the major components of the ETF, there was some interesting opportunities. So messy but interesting. You can now go to diamondarm.com and subscribe to a very amazing newsletter, by the way.